Traders with BIS Commodities with your closing commentary for the week ending September 20th, 2019. Um, Two major topics to touch base on this week. One would be the oil refinery attacks in Saudi Arabia this past weekend. The on again, off again trade talks, and then lastly, I want to address the strong cash in corn, strong basis levels to make sure everybody in the country is aware of that. So for the week, corn 2 cents higher, fairly quiet week, lowest volume week since March, I believe. Beans down 16 cents, wheat penny higher. In the livestock, we did see hogs lose about $4 this week. Most of that was today, and I'll touch base on that in a second. Cattle market up at about $1.50 as the cash market continues to slowly firm up. And the leading story of the week, as far as the commodities are concerned, was crude oil, which was up $4 in the week. But keep in mind this $6 off the high on Monday, and again, that came off the major move Monday morning with the refinery attack in Saudi Arabia. As the week wore on, the Saudis mentioned that they should have most, if not all, the production back up and running by the end of the month. We were also shown a cattle on feed report this afternoon, Friday afternoon. Cattle on feed, 99% of a year ago placement into feedlots, 91%. Marketing's at 98%. Those numbers will be deemed a little bit friendly come Monday morning, especially with that placement number at 91%. Keep in mind, grazing areas, pasture in the western plains and so on are much better shape than we've seen in recent years. Now to the trade storyline, which was to some degree the driver of the markets here today. President Trump was having a press conference with the Prime Minister of Australia, and during that time frame, the press asked about the Chinese trade situation, and he basically mentioned that he wants a full deal on a trade agreement, not a partial deal. I think there was some hope that there would be some sort of partial deal, which obviously would include the ags. That was what the market was kind of talking about off and on this week, especially with the Chinese trade officials visiting some ag-related farms and industries this week. But as soon as that news story came out, the Chinese trade officials decided to cut their visit short. So the on again, off again saga of the trade thing continues after some modest excitement a week ago. That seems to be all taken back away today. As soon as that news came out, the algorithms of the computers sold beans, hogs down hard at that time frame, along with the stock market taking a pretty major hit. So that is going to continue to be a storyline as we progress through the balance of this year and probably into next year's election year. Also, as I mentioned earlier, I want to address the cash market, which is kind of an interesting phenomena this week. Is cash basis, I should say, is 20 to 60 cents higher than a year ago at this time. We actually had one customer in Illinois where their cash corn basis is 68 cents a bushel firmer today than a year ago at this time. Now, so what's creating that? Well, producers seem to be very reluctant to sell grain over the last 60 days because of the sell-off in the market. Producers also, because of a question mark of their crop, especially in the eastern corn belt, could have some impact on that. And from an end user standpoint, harvest is obviously later than normal this year. The weather forecast over the next 2 weeks continues to look somewhat wet, which will continue to add to some of that delay in harvest. So with that in mind, this crop should be easier to put away than we've seen in the past. harvest, so not as much logistical issues going forward. Throw that all together, get a pretty strong basis. I think the lead storyline, though, is the producer holding on to inventories. Now, there seems to be a thought process in some cases about the inventory is not out here, the stocks aren't out here that people want to think. I guess the answer to that is we're going to find out on September 30th, a week from Monday. That is when the final stocks report comes out on the grains, and that will be as of September 1, so theoretically that is the carryout, okay? And it's going to be interesting to see not only who has the stocks, but where they are. Now, if we use the June report as a barometer 3 months ago, keep in mind these reports come out on a quarterly basis. At that time, there was a huge increase over the previous year of on-farm stocks, especially in the Eastern Corn Belt versus a year ago, and a fairly significant decrease in off-farm or commercial inventories at the end of June, and that's pretty prevalent. The other thing, and again, that was mainly in the East, in the West, not quite as dominant that way, but commercial or off-farm bushels were down. The other thing to keep in mind on this report, since June 1, we had the last stocks report, the subsequent supply and demand reports have added 250 million bushels of carryout due to export issues, due to slowing down of ethanol. So it'll be interesting to see how those numbers all play out here at the end of the month. Keep in mind, from a seasonal standpoint, it's not uncommon for the corn market and to some degree the bean market to firm some from early mid-September through about the 1st of November. This is especially true over the last 4 years. And in these last 4 years, the carryouts have been pretty similar to what is anticipated to be this year. Now, to take that a step further, again, comparing the carryouts and where you're at, current July futures, July of 20 that is, are just shy of $4 a bushel. The last 4 years, from from November 1st through May 1st, July futures have not, I repeat, not traded above $4. So that will be interesting to watch and see if there's an opportunity between now and the 1st of November, which is somewhat common, to see an uptick in the market. And I would encourage customers to kind of look at that, and if they need to make some sales, that may not be a bad place to make some sales against that July and then see how basis levels are going forward. Now again, jumping back to basis for a second. At this point, we anticipate corn basis to be stronger than normal through harvest. We may see the typical harvest softening of basis, but I think that will be fairly quick and being responsive to lack of movement to some degree. So it feels like basis could stay fairly firm, at least through harvest and maybe into the early part of the winter months. That is solely based on supply, availability of supply short term. It's got nothing to do with a demand structure that doesn't look very good right now. So we've kind of got a tug of war in that situation. So looking forward over the next week, a few things to kind of keep in mind, obviously, is the weather and what kind of impact that may have on harvest progress here in the U.S. And starting to put an eye on South American weather as we get into the early part of planting and the early part of their growing season. That will be key. Headlines, whether it's politically related or trade related, continues to be a talking point. And then lastly, like we talked about, September 30th stocks report could be pretty key. So if you have any questions in any of these markets, feel free to give us a call. BIS Commodities, phone number is 800-373-2525, or catch us on the web at biscommodities.com. With that, everyone have a very nice weekend.